be like, who are you talking to when you're talking to Kevin? It makes it easy to only call
What's
him.
up with my hair
It makes
today?
it
Got crazy hair.
all
When
the
you call me
viewers.
Kevin, I feel like I'm being admonished for something.
I don't know. I guess maybe I've just brushed it weird.
I just got a new Einstein hat in the mail. It was a gift.
That's funny.
Getting hit by a car yesterday. My back is
So
so
how did it
sore.
hit you? What happened to you?
So I was on an e-bike, right? Because I take the e-bikes when the traffic's really bad, like
Yeah.
to get back from the office. Because like sometimes LA, there's times when it's really bad, and so
Right.
the e-bike you can just cruise, right?
Sure. Yeah. Well, you
So
didn't
I'm
even have a
coming-
helmet on. What's up with that? Gotta get a helmet, dude. Like the most important part of the body. There's a lot of idiots out there.
Fair. I don't have an argument
Mama
against
Bear's
that.
that'll be Nadine, Mama Bear, Terman if we're going for nicknames. Anywho, we're on the air. Well, we'll catch up on your accident, getting hit and run yesterday. Hopefully they stopped.
My back's so sore. I can't this is taking everything. Just sit up like this.
Oh, sorry. Hopefully tomorrow it won't be worse. Listen, it is December 9th. Can you believe it? 2025. We got a lot of bees for you today, buzzing in the air with Ben Brey, Bakes Baker. Lots of bees going on today's show here on Tuesday. And I'm Nadine Terman, your host for Wall Street Beats, powered by Passes. And everyone's just waking up, drinking their coffee, waiting around for Fed Day tomorrow, as it seems to be. But we did get some important news, which we can go over. But Ben, why don't we start with you? What are you looking at today?
Yeah, I think the Fed day is pretty much fully priced, to be honest. If you look the hawkish cut, the second hawkish cut, because if you look the front of the trade that we put on and was buying the front end contract of the SOFR, the December when it was 96.16 and now it's 96.27. So that half cut that kind of disrupted the markets and after the last hawkish cut, which wasn't priced in, right?
Yeah.
And then, if you go the out year, they took about 20, 25 basis points off since late November. So that hawkishness is actually priced in. I don't know if it's priced into the equity markets, but what do I know? The equity markets have their own brain. They're not very smart macro market. But what I do have, so that's it. I just think hawkish cuts priced in to the actual rates market. We'll see what happens with equity markets. But we bought the Schlumberger, and I gave this out on Friday on the Benny and the Squirrel show. And let's pull it up. Let's pull it up, Baker or Bakes or Kevin.
Yep.
Or see, this is why I just need the Bakes to be on there.
You need one word. Ben needs a one word. It's a simple man.
Look, I talked about this at length that like the services are the most hated space for maybe like a decade. Like you had a nice little run off that trough in 2020, but I mean, remember that was when energy was so hated.
Yeah.
Yeah. What years are that? I can't really see the bottom.
Yeah, it looks a little fuzzy.
Well, look, the bottom is 2020 over here, and then you have the post-COVID bounce after negative oil. But it's been dead money for 5 years. I mean, I've said this, so many times on the show. But I agree with you, and I talked about it a little while ago with Bob and Martin. But this is, I'm with you. I mean, look at this. This past year, it could not get of its own way, and I kind of view this as the name that PMs pull off the shelf when they want to be in energy service, and they're pulling it off the shelf with you.
I mean, Halliburton and Schlumberger are the only two that have any cap, right? Like if you like Marston's Weatherford, you go down a bunch, and then I have one called NESR, which is worth a look, but that's like tiny. So you got to ask yourself, do you really want a small mid cap oil services company? The answer is most likely no, unless you really know what you're doing and you can accept some volatility and what you own, right? Like because it's gonna move and it's not unless it goes in favor. I made money in that NESR, but it was because it got delisted. So I bought it at 350 and now it's at 10. But that's a different level of game than most people want to play. Anyway, Schlumberger has a 9%, 8% free cash flow yield, depending on what you're talking about. So these guys are making cash. And I think that the call option on the whole thing, and this is a little morbid, but it is what
Yeah.
it is. Venezuela, Venezuela's all these like services, of like their whole equipment of their whole industry is gone. And if Trump and these guys are dead set on a regime shift there, one way or another, you would think that that would be very positive because Venezuela actually has more oil than Saudi Arabia. So I think it's an interesting stock. I think the valuations with you. I think the charts with you. I think the level of hate is still there, and so it doesn't take that many tourists from Fidelity and Capital and wealth managers to be like, all right, I'll allocate a little bit more. And then remember, as energy does better because it's such a low weight in the indices, you can actually get that little bit more weighting, which is one of the major drivers of performance
Yeah.
in the longs in equity markets. So Schlumberger.
All right, that's interesting name. So I'm going to give you a few things here, even though I'm moderator, of things that I'm looking at that if they occur, I might want to be ready to act on. Because sometimes it's not about what you can do today, but being ready, right, for when events occur, how you're going to react. So do you remember how nobody liked Google back in September, right? Like Google was going to die because search was going to die because of AI and yada yada, and it's like been up a monstrous amount, was like 38% or something like that since that time. So it's had such a big run. But OpenAI likes to announce things in December by year end. So what if they announce things that looks like they leapfrogged and then Google loses some of its luster because everyone just thinks they're going to crush them, and plus there's that big investments in chips and blah, 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 but they could lose a little bit of luster on some OpenAI announcements this month. If you see Google go down because of it, I would argue take a look at the price. If you're going to you might get a good entry, like a re-entry on that name. So hold on to that nugget and keep watching out for that. And the other one is, and I know I think of these things as a trade for like Bitcoin. But you got folks, big folks meeting with the administration this week to talk about crypto and exchanges and blockchain. And given how poorly it traded before, and yes, yeah, maybe it's gone up a little bit since the lows, I'd argue it might be a decent entry price if you're taking a flyer. So take a look at that just on potential news. Obviously, his family, DJT's family, has lost a boatload in the crypto world that they thought that was going to just keep shooting to the moon since the fall, and it hasn't happened. So I would expect that could be, if not, I don't think maybe it was this month, but early 2026, you might see that back on the radar as key headlines that people are investing in. And the other one is Adobe. So if they print good numbers right now, because it takes a while to get software out of your system, right, and processes. Um, but I mean, it's not an unknown story that AI could take over creator bases, but they've obviously been printing pretty well. And I would say take a look at that in after some more announcements from the company. If it keeps rising, I'd be looking at that as the short of 2026. So of things to, put in your stocking for 2026, because I like to look at those things, right? Like it's not about just the play right now, but, can you make some plays that get switched around next year? Those are some things that I'd be looking at. But Bakes, what are you looking at?
This is the third time on the show I've talked about Eastman Kodak, and I've got a highlight reel. I think probably around this initial breakout here, and then I mentioned it about a month ago, and here we are, and we're just seeing confirmation. Look at the volume. I mean, I didn't look at the short interest before I came on, but the bull versus bear debate. The bulls are winning. They revised their pension. They brought down their debt. They apparently have a real estate play here that is substantial.
By
They're
the way, Banks, it's
pharmaceutical.
about 8%. Short interest as a percentage of float on Bloomberg is like 7.99, so 8%.
Okay, all right. I mean, not monstrous, but not insignificant either. And this was caught up in the mean trade here, way back when, and so there's obviously a lot of skepticism around that. But it just looks to me like it's time. I mean, this is catching a big time.
Okay. So you're room to
So
run.
These
Where's
guys
it gonna
make
run
money?
to?
I didn't even know these guys were in business anymore.
well, I brought that up the first time, Ben. I said I thought these guys were dead, and I think I called them Lazarus or something. But they're not dead. And Maris has forgotten more about pharmaceutical manufacturing.
They have actual EBITDA. Look at that. Huh.
You see what I mean?
66 million last 12 months EBITDA. 33 cents a share of earnings. Now, that's an expensive stock, but not crazy. Was that 30 times? Huh. Look at that.
And
Eastman Kodak film.
And I kind of
other stuff. Yeah.
Well,
and I like that because when I have an initial reaction of what a joke, I go, okay, maybe I should check my premises because the market's very smart, and there's a billion people with a billion Bloombergs, and they say, okay, Eastman Kodak isn't dead, and that's a Louis Yamada base right there as far as I'm concerned, and that's. And so if it pulls back here into the eights, maybe you want to get more interested. But this is extended even for me. But I think something's going on. Something's going on here, and I just want to bring it up because I'm pretty sure it's the third time.
Yeah. Okay. All right. So for those of you, hopefully you listened to him. Maybe you made some money on this, but maybe you trim now and you wait for a pullback. Is that fair? Or you're holding?
I would say that's fair. Yeah. I would say that's fair, unless you're convinced that if they sell the real estate, the stocks are double. And again, I've done virtually no fundamental work on this. I can't buy individual names, full disclosure, but I can read a chart, and that's a pretty damn good looking chart.
All right.
I get two more. We forget time, real quick.
Yeah, we always got time.
I haven't mentioned this to Charlie yet, but UBS looks like it's turning around. Okay. This is being called the Morgan Stanley of Europe, and it's now it's up there. I'll grant you that, but the Credit Suisse deal has been absorbed, and there's talk of.
I'm only laughing, Bakes, because I own it. So I'm going to give you full disclosure. I own this one.
Okay, great. They're
powerhouse in wealth management globally, right? Yeah, and they're going to get a lot of cost savings from CS still. Yeah, so good stuff.
My eyes drawn to this volume spike that has nothing to do with earnings. I didn't see any particular news that would warrant this reaction. I think there's some talk of having a headquarters in New York or something along those lines.
Getting listed in the U.S. Yeah, like changing headquarters, listing in U.S.
Exactly.
In terms of being more U.S. focused. Yeah.
And obviously people have genuflected to the Morgan Stanley transformation. Wealth management gets a multiple that trading and banking doesn't, and I think that's. And obviously people have genuflected to the. Excuse me.
We got the infinite loop
yourself,
of
Bakes. Yeah.
Bakes squared. We'd have to put a Bakes with a little tilde and a 2.
We're gonna have 6.
Yeah, I don't know why that kicked up. What's the last one? Disney.
Disney.
It's making it official. The 50 days coming. I got to turn this up. The 50 days coming down through the 200, making it official.
Hey, let's talk about this Paramount deal too. When he's done, this Paramount Warner Brothers deal for a second.
It's fun times. Yeah, but go ahead. So what are you thinking about Disney?
Well, and I've mentioned this in the past. My sell discipline's kicked in. The 200-day goes down. Around here or so. the close below the 200, and then the coup de grace is the 50 crossing below the 200. And this doesn't work perfectly. And stay tuned because uh, uh, I'm using Gemini 3 a lot, which is why your Google comments intrigue me. Because I'm going to see if maybe the history that I use to build my cell discipline might need to be refined and updated. So stay tuned. But it works most of the time, not all the time, but most of the time, and it sure as hell keeps you out of getting your head kicked in. But the earnings report was met with Bronx cheers. We're rallying feebly on low volume into this resistance area, and I think the bull case seems to be relying on Zootopia and Avatar breathing life, but the rest of the business seems like it's a melting ice cube to an extent. And I'm just really drawn to this too. I mean, you want to talk about a trading range? Come on, baby. 80. Look at the way it treats 80, and also look at the way it treats 125. That's the channel, and so you can kind of play around in here. If it bounces up against 120 or so, I think it's a short. Not a dramatic. I can't see who buys these guys, but I could be mistaken given what you're talking about in the media right now. But if it goes below 80, it's in a world of hurt. A world of hurt.
Okay. All right, I'm gonna look
I
here.
bought it once at 80, like the fall of 23. I remember it was very hated. Let me look at your little map here.
Yeah,
I'm
right
looking
here.
at the
right there,
trading
right
range.
there.
I'm looking at a pretty tight trading range right now, 103 to 10, call it 110, 109. But it's got right now 2.6 odds like to the downside versus the upside. The trading range is narrowed a little bit, but yeah, medium term it's bearish, short term neutral. So if the short term momentum turns bearish, you could see this thing falling further. Yeah. But right now it's
Oh,
just kind of like, middle of range.
I'm actually going to give him some business. My niece is coming to LA in January, and I might be a threat to go to Disneyland for the first time in 30 years since I was a kid. I am not.
Sounds horrible.
I'm sure it looks a lot different.
Yeah.
You're not really a fun person, are you, Nadine? Like, just
absolutely
you can't
not.
be talking.
No,
That
I love
sounds
Christmas
horrible.
though. Oh my god, I love Christmas. But like big crowds. I'm not a fan of big crowds. That's what I don't like.
I mean, I'm not a big fan either, but I would go with my niece once every 30 years. I think it's okay.
Yeah, absolutely. Put her on the shoulders. Yeah.
Yeah, so just finishing on the media thing, like, do we think Paramount? Do we think Netflix? I'm actually right by the Paramount headquarters here in LA.
It's hard to see. Well, if they're going to
think?
go straight to if they're going to go straight to shareholders, like maybe Netflix isn't going to get them, right?
I mean, they up their bid. I mean, it's going to be tough to say, oh no, we're going with Netflix if these guys up their bid.
Yeah.
I don't know the politics behind it, but I do know that the new head of Paramount, his dad is one of the richest guys in the world, although he's had a rough fall, to be fair.
Yeah.
And I'm talking about the Ellisons of Oracle. What do you think, Banks?
You're not talking about your last night.
I've been negative on Netflix, and this is kind of dovetails with Google. I think it was on the show with Steve and maybe you. I said with Netflix that things are so good they're bad. This spread over the 200-day is about as wide as it gets. It looks similar to Google, Nadine, where things there's so much love and so much repositioning that it stretches that it's hard to make it. I frankly didn't see all this coming, but I just said, hey, if you have any fundamental concerns, lighten up on Netflix, and then you see what's happened since then. And they don't like the fact they've won this deal, and then you have their coup de grace, which is the 50-day violating the 200 over here. So
that looks terrible.
It does. It does.
Yeah, I thought this was a bad deal for Netflix because when you think about okay, I'm a subscriber to both services. Oh, actually, my girlfriend is a Netflix subscriber, but the household, let's say, you combine them, or say you guys are, could you get the double pricing? I don't know if you could get the double pricing. Maybe you could get hey, we can take it up to 80% of the price of both of them, but you got to leave some value to the consumer. And I mean, obviously, the equity market doesn't like it at all. I mean, if there a chance that this deal doesn't get done, then you get the snapback? Is that there's a potential for that? You think?
Oh yeah, for sure.
So is this deal like for sure with Netflix, or is it like
I don't
Paramount's
think
still
anything's.
in?
I mean, you never know. I think that the call comes down to like you might see another bid, right?
Hmm. I don't know. That's the part I don't know. This has been fascinating though. When's the last time we saw a hostile bid on a big asset like this? Especially
Yeah,
Warner Brothers is Hollywood. It's like the history of Hollywood. Like one of the original big
yeah,
studios. We're talking about the Batman and Bugs Bunny.
yeah.
Yeah, I find it very
The
interesting.
Netflix had a great special, the Titans of Hollywood, and the history of all these studios, but Warner Brothers in particular. It's fantastic. It's very, very entertaining.
That's cool. I like
Kind of
documentaries.
interesting. So I just went on to see what subscriptions I have through my Amazon account, and for one of them, I'm like, oh, not the Amazon Prime, but there's a different like sub subscription, Acorn. I just said, oh, cancel it, and they just came back. How about $4 for 3 months?
I
So
should go do that. I'm gonna do all
yeah,
that.
just
I'm gonna do
yeah,
that right
do
before the
that.
end
I
of the
bet you'll get
year.
a yeah, exactly. You'll get a 50% improvement at least for a few months. So
I'm doing that for
if anybody's
everything.
yeah, just if you want to feel good about, watching your pennies where they go, and especially if you're like, I don't think I've watched TV for over a year. So yeah, makes you feel a bit better about that stuff. And I think that especially when people are feeling tight when they see those, monthly subscriptions going on, and is anybody using them, and do they really need all of them? I think your point is valid. Is just you'll pick the ones that somebody in your household absolutely has to have, but you don't need five of them. All right. Well, I think that's it for our show today. Again, it was December 9th, 2025, with Ben Brey, Kevin Biggs Baker, Nadine Terman here on Wall Street Beats, powered by Passes. Subscribe, tell your friends, and keep an eye out post Fed Day for some opportunities, because the end of the year, it's not always quiet. Take care.
Thanks, folks.
All right. Thanks,
Thank you,
guys.
Jen.
Bye.
Thanks.